Concept of leverage. Objective of financial management is to maximize wealth. Here wealth means market value. Value is directly related to performance of company and inversely related to expectation of investors. In turn, expectation of investor is dependent on risk of the company. Therefore, to maximize value, company should try to manage its risk. This risk may be business risk, financial risk, or both. In this chapter, we will discuss factors that influence business and financial risks. Meaning of leverage. Meaning. The term leverage represents influence or power. In financial analysis, leverage represents the influence of one financial variable over some other related financial variable. These financial variables may be costs, output, sales revenue, earnings before interest and tax, earning per share, etc. Generally, if we want to calculate impact of change in variable X on variable Y, it is termed as leverage of Y with X, and it is calculated as follows. Measurement of leverage is equal to change in Y by Y, divided by change in X by X. Types of leverage. There are three commonly used measures of leverage in financial analysis. They are: operating leverage. Operating leverage is the relationship between sales and earnings before interest and tax and indicated business risk. Financial leverage. Financial leverage is the relationship between earnings before interest and tax and earnings per share and indicates financial risk. Combined leverage. Combined leverage, the relationship between sales and earnings per share and indicated total risk. Chart showing operating leverage, financial leverage and combined leverage. In this table, sales less variable cost is equal to contribution, less fixed cost is equal to operating profit or earnings before interest and tax, less interest is equal to earnings before tax, less tax is equal to profit after tax, less preference dividend is equal to net earnings available to equity shareholders or profit after tax. Operating leverage. Meaning. Operating leverage means tendency of operating income to change disproportionately with change in sale volume. This disproportionate change is caused by operating fixed cost, which does not change with change in sales volume. The use of assets for which a company pays a fixed cost is called operating leverage. Operating leverage is a function of three factors: amount of fixed cost, variable contribution margin, volume of sales. Degree of operating leverage. Meaning, when we measure magnitude of disproportionate change, it is termed as degree of leverage. Degree of operating leverage may be defined as percentage change in earnings before interest and tax with respect to percentage change in sales quantity. Degree of operating leverage is equal to percentage change in earnings before interest and tax divided by percentage change in sales. R. Degree of operating leverage is equal to contribution divided by contribution minus fixed cost.